now listening to Wealthy Sisters Radio Show. You're now listening to Wealthy Sisters with Deborah Hartnett.
Radio. Well, hello. Great morning. Welcome to Wealthy Sisters Radio with a View. I am Deborah Hartnett, your host, and I am thrilled, extremely excited, and extremely grateful to be here before you today. I do value your time. I don't take it lightly. I really appreciate you for taking the time to share this space with us today. And you know, as I said, and I say every week, this is going to be an incredible show today because I have another one of my friends. Y'all, I'm so blessed. I am. I know it. I have beautiful people in my life. And this brother is like a brother to me. When I tell you he is truly documented, okay? But I'm getting ahead of myself. Let me just remind you of the purpose that we have here at Wealthy Sisters Radio with the View. It is twofold, and it is first to make sure that we are providing inspiration and encouragement to you. And I mean that sincerely, encouragement, because we know sometimes it's just one little extra word that you need to keep going, to know that there are things out there that you can do to impact your life. And that's what we want to be able to provide, that information, practical knowledge that can impact your business right away or even long term, or most importantly, both. And secondly, our purpose is to provide a platform to showcase, to promote and edify and let you know that there are some powerful sisters and brothers doing great things. And today's show is no different. Yes, right? You are going to have a treat, and this is our treat today. That's right, none other than Mr. Douglas Aze. He needs no introduction. He's been here on Wealthy Sisters. He's a friend of ours, but I gotta tell you, he's been in this industry, a wealth strategist, 20 plus years, has companies all across the world, and I'm telling you, as an author, has written that book, Creating Generational Wealth, what the super wealthy know that you need to know. I hope I got that title right because I say it over and over. But anyway, y'all, without any further ado, please give a huge welcome to my brother, Mr. Douglas Aze.
Hey, how you doing, Deborah? How are you?
Man, I'm telling you, I'm super excited to have you on the show today. Thank you for sharing this space and time with us today.
Thank you for having me. Great show.
Well, it's going to be great because you are here. You are someone that is truly documented in the field. There are there is a lot of noise out here today. I mean, social media has been a good thing for us.
Yeah.
We can agree to that. But I know you will also agree that it also brings, like anything, it brings a lot of things that leave some room for, questions maybe or improvement. And a lot of times people can get misinformation, things that I like to say it's all upside down there. So things that make sense, that used to make sense, they are not making sense today. It's not supposed to make sense. So you know what I'm saying, but you are here to talk today about those wealth generating secrets that are hidden, that are right there in plain sight.
Yeah, definitely. Sometimes we get carried away with social media, and people running to making decisions based on emotion.
Right.
Hoping that overnight success, they're going to become millionaires because they see somebody showing off on social media.
Right.
We talk about it, just, success is patience. You got to be very patient. You got to be consistent, and you just got to keep your grind going, but never becoming a victim because somebody can take advantage of the financial ignorance that most people have. So
Mm-hmm.
one thing that I teach is patience. Like I was talking to a gentleman yesterday, actually, and he was like, "Man, he believes he's making." He said, he's in his group of friends. He's successful. I said, "Yep, you are." I told him to embrace that. He said, "But when I see you, I want to stretch. I want to do more." I said, "But
Right.
at the end of the day, see me. This is 20 years in the making.
Right.
It didn't just happen overnight. It's 20 years in the
Right.
making, and
Right.
just be appreciative of where you are, and yes, still set a goal for where you want to go, but and just keep pushing. So
Mm-hmm. Mm-hmm.
it's important for that. But there's so many things a person can do to just continue to scale up. But the most important part is you still got to always think about defense. 'Cause
Mm-hmm.
you not just go, 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 which is the offense part. Everybody wants to get rich, but then
Mm-hmm.
they forget the most important part, which is the protection part. Making sure
Mm-hmm.
that you protect your wealth, because the last thing you want is somebody coming after it and taking everything you've worked hard for. And it might not even just be you, but it could be your children,
Right.
that somebody could go through and grab your wealth from them. So it's important to think about defense as well.
Important to think about defense. Now you've said in just those few short minutes, you said a lot that we could be here hours talking about: patience, appreciation, consistency, and then protection. So
Right.
before we get into you elaborate on all of those things, because again, you couldn't say all of that if you didn't have the 20 years in the game.
Right. True. True.
And when I tell you guys, I cannot think of a person that's more patient than Mr. Douglas. I'm telling you that. But if you don't mind, just for a few moments, because everybody hadn't had an opportunity to get to know who you are, to get to know your background. And I always like to say, what were those beautiful ingredients that went into the recipe that we see today? Like you said it, you're seeing something that 20 years in the making. So you mean to tell me you not the same Douglas that you were 20 years ago?
No, no, it's all growing pains. You grow, you learn, you make mistakes, you revamp. I always tell people, man, I don't regret nothing, because every experience is a teaching experience for me.
Right,
So I don't go back and dwell about yesterday or whatever. I keep
right.
moving forward. As long as I'm alive, I keep moving forward. But just like you said, I was 24 years old when I got into the financial space. I was waiting table at IHOP with no college education or nothing, and somebody handed me a business card. And from that, I said, you know what? I got into this financial industry. I need to learn something to make me different from everybody else that's in the same space as me, doing the same financial services. Like, what's going to set me apart from the other guy? So,
Right.
you know what? Let me study wealthy people and just understand how the wealthy operate. And as I started studying wealthy families, I started realizing, man, they do things differently from everybody else. And then I run into my mentor that taught me some other financial knowledge that I didn't, I knew existed, but I just didn't know how it was implemented. And that encouraged me some more. And then, as you know, with everything in life we do, the more you seek knowledge and information, the universe is going to bring it to you. And that's what happened for me. I mean, I was able to tap into some really successful people that are going the way that I wanted to go in this financial world. So that came for me a whole lot. And we also decided in our business, to do differently and help our clients identify places that they're throwing money away. Because unfortunately, for so many people, their wealth that they build, they transfer it away unknowingly. Because
Okay.
they don't realize that the banks, the media, the government, and the pharmaceutical industry, all four of them are very interested in the wealth that we have, that we're making. Because all those industries I mentioned, all those people, they do not print money. The government don't print money. The banks don't print money. The media don't print money. And the pharmaceutical industries don't print money. But guess whose money they want? They want to use your money.
Right.
So yeah, go ahead.
No, I'm glad you're getting into this because I want to make sure that our audience knows that this is not for just for someone that's already at whatever someone would call wealthy, six figures plus, 500,000 plus. This is what you're sharing with us today. Is this for someone that may be making 50 grand on their job, but they want to be able to maybe start a business, or they want to be able to expand their business? Maybe their business is only making 50, right? Who are you talking to right now? Let's be clear, because we don't want them to sign off and miss what you get ready to say. Oh, that's
No,
not for
I
me.
mean, I'm talking to everyone that is working hard out there, putting in the time, be it their job or their business. Like, I'll give you an example. Yesterday, I was talking to a 25-year-old. She's making 60,000, 63 grand a year. And we were sitting down doing her financial plan, and I showed her. I said, you know what? I know you see your 63,000 and you see it so small. I said, but let me show you the value of that money, because
Wow.
you need to understand the value of what you got. So I showed it to her over. I asked her, when are you gonna when do you want to retire? She said at 57. I said, all right.
Okay.
I said, so from 20 from your age 25 to 57, let me show you how much that 63,000 is worth. And we did some numbers based on if they raise and all the other stuff that I do when I sit down with the family. And I showed her that she's worth, her 63,000 that she looks at today is worth over $19 million.
Oh, wow.
Then I asked her, now that you see this value of this money, 19 million, how does that make you feel? She's like, well,
Wow.
I never looked at it that way. I say, you don't look at it that way because you just see the small amount. But guess who's looking at 19 million? The government is looking at 19 million. The banks are looking at 19 million. The media are looking at, they want all that money. And I showed her how much of that, every dollar we make, and this is important for everyone to listen to, every dollar we make, 40% of that dollar goes to taxes. See, we never think about that. We only think
That's
about
right.
the income tax that we pay, not realizing that 40 cents of the dollar goes to taxes. And I'm talking about the water tax, the gas tax that we pay when we buy gas. When we go on vacation, the taxes we pay buying the airline tickets. By the time you added all the taxes up, including your income tax, and for the people that are in the states that pay federal and state tax, by the time you add up all that, that's almost 40% out of your dollar. Then the other 34% goes to the banks, credit card interest rate, student loan interest rate, financing a car interest rate. By the time you look at all that, that's 34% of your dollar. So now between the government and the banks, that's 74% of your income that's gone. And then you're left with
Gone.
23% to enjoy your lifestyle. Drinking coffee at Starbucks, going to the movies, enjoying your family, creating beautiful memories. 23%. So then you only left with 3% to save for your financial future. So it takes a lot of discipline, a lot of effort to now change that. So what I did with her, I just showed her how we need to focus on two things: the taxes and the debt.
Okay.
Those
Okay.
two alone, that takes 74% of your wealth, is what I focus on. While a lot of other financial advisors focus on, oh man, yeah, you're saving 3%. Let me get you higher interest rate. They keep chasing the stock market, the higher rate of return, instead of helping our customers and our consumers, our people, the middle income, the wealthy, helping them minimize those two problems. And if you think about the super wealthy, which is what I talk about in my book, the super wealthy, what are they doing? They're looking for ways to what? Minimize taxes, get out of debt, and protect their wealth. Those are the three things they do. And when we talk about debt, we're not talking about debt that produce money. I'm talking about the debt that do not produce money, because there's a
So
difference.
you're saying, wait a minute, you're saying that there's debt that produces money?
Of course,
What you talking about, Willis?
So, for example, right? My credit score is 850,
Okay.
but I have a lot of debt. So, how is my credit score 850 and I have a lot of debt? Well, because I use debt.
You just messed somebody up. You gotta give a little. You just messed somebody up.
Because I use debt, to leverage. For example, the U.S. government. I'll give you an example. There's this
Okay.
website everybody should go to called usdebtclock.org.
U.S. debt clock.
usdebtclock.org.
Okay.
All
All
right.
right.
So if we go on that website and you see it, it shows all the amount of debt that the U.S. government have,
Wow.
and everybody focuses on the debt. But then what they don't focus on is how much asset the US government has. They have more asset. They could write a check and pay off the debt immediately if they want to. But they choose not to pay off the debt. They choose to hold on to the debt. But building up their asset is so high, which is this. When you have debt that's right here and you have assets that's here, you're not really in debt. You're just using the debt to stay afloat and leverage because you have more cash and assets more than the debt. You could write a check anytime and pay off the debt. But a lot of the problem most people have is they have debt and their assets is right here
Assets low and no cash flow.
and no cash flow, and they have a lot of debt. I have a
So
lot of cash flow and less debt.
and less debt. So you're saying like there's a teaching out here that we need to pay off our car, we need to pay off the mortgage, like pay, 2 payments ahead so that you could just pay it off, pay everything off in advance. But you're saying something different. You're
No.
saying leverage that.
It's
Is that what you're saying?
Yeah, you got to leverage it. So check this out. I put a post one time and I said, do not use money that's supposed to be going to a compounding interest account to pay off a simple interest debt. A lot of people get confused the difference between simple interest debt and compounding interest money.
So that's the money that we're earning. The compounding interest that's our asset money.
When we save money, because there's difference between saving and investment.
Okay.
So just to kind of clarify, so people understand, investment is speculation.
Okay.
It's speculation.
Oh man.
Savings is compounding interest. So when I invest money, I'm speculating and hoping it's going to make money, which involves risk, which I have to lose the money. When I invest in a business, I'm taking a risk.
Right.
When I invest in real estate, I'm taking a risk.
Okay.
You only see the glamour when it comes to real estate, or people that say, "Oh, I bought a property and I made all this money," but the reality is not everybody it's that lucky, right? And I've seen so many people put all their hard-earned money in the house. And then I ask you a question. I'm saying, first off, you went to the bank and you asked the bank to loan you money to buy this property, and they gave you the money. Now understand this: your house is not an investment. It's just a place to live, to create memories for your family. It's not a generational wealth. You ain't passing no. They don't want your house. They want the cash.
They want the money.
Children want the money. They don't want the house. And then I ask people, I said, do you want your parents' house? They're like, no. Because when you grow up, you have your own family, you have your husband, he definitely, or you have your wife, she definitely don't want to have that house. Now, yeah, they could inherit it, good, but understand this. If they're not financially literate to be trained, guess what they'll do? They'll sell that house real quick to an investor that will buy it and turn it into something. So the key is put your money in an account that's going to grow, compounding, while you're waiting for the opportunity to invest the money. And there's so many opportunities when they present themselves. When you make that, you could make double-digit returns investment. You could make single digit. It just depends on what opportunity you're investing in. So your money got to be ready to be used for opportunity. But now the way you use the money is also key, where you can even now leverage that money. Because now when I have the money, it's earning compounding interest. So another thing is I don't want my compounding interest to be interrupted. I want it to continue to grow uninterrupted, which means if my money is here, I want it to keep growing. But what I'm going to do is use it as leverage, as collateral to go borrow
Okay.
money. A lot of times people
Okay.
don't realize you could use your cash as collateral. It don't have to be your house. It don't have to be your car. Your cash could be your collateral to borrow money from somebody else, because your cash is earning compounding interest. I could use that cash and go to a bank and say, listen, loan me money based on simple interest. And then when they
Wow.
loan me the money, because I also have great credit and then I have cash, the banks will give me money all day at a lower rate. Why? Because they know I got the money and they know I have great credit. That's why I always say credit and cash have to be married. Cash is king, credit is queen, but they got to be married for them to
They got to
work.
be married to work.
To
It
work.
got to be a union.
Yeah, they have to have a union. They got to go to church and put that ring on it.
They got to be on one accord. Yes,
Yes,
the
because
ducks do have to line up.
he has to. Because there's some people that have great credit, but they don't have no
Yes,
money. And there's people that
right.
have money and have no credit.
They'll have no credit. It's just you got to get to both of them.
You
So
gotta
you
have to.
telling me there are some vehicles here that exist for you said I mean you just I've been around been around this space for some years now, but I just had a click, and maybe everybody else already got this, but investments is speculation.
Yes, it is.
Savings is compound interest.
Yes,
So when we think of savings, automatically we thinking of the banks, right?
right.
And I can't imagine that's what you're talking about, because I don't know what I could get at it. I mean, I feel like I could keep it in the wheel of my car better
You
than
know,
in the bank.
so with the banks, and I say this, as long as we understand the game and we could play, once you know the
Okay.
rules, you could play in it. So the
Okay.
banks, we go to the bank and
Okay.
we loan money to the bank.
Okay. And then we
When
loaning them to the bank. Is that through the checkings or that through our savings?
Either
Or
one,
both?
checking account, savings account. Checking account, you get zero interest, right?
Right.
But it's okay because checking is to pay your bills,
Okay.
all right? Then the savings account, they pay you 0.25% interest on your money. Now, a lot of people, even though I hate it, but for the people I'm talking to that might have money sitting in the savings account, here's what happens. I call it a put and take savings account.
Okay.
They put and take. You put it in and you take it out. And then every time you take it out, you just interrupted the growth of the money.
Right.
Because even though they're going to give you that little interest rate of 0.25%, there's not really a whole lot, but it's better than it sitting under your mattress. At least under your mattress, you're getting nothing.
Nothing.
Now, with the bank, you're still getting nothing, but at least you're getting 0.25%. But I tell people, there's a bank that a lot of folks don't talk about ever. And when they talk about it, they talk about it so negatively. And it's the insurance company bank. Unfortunately, many people don't see that because they think life insurance is just for death. And they push the type of life insurance that they say, okay, buy this and invest the difference or whatever the case might be. But not realizing that insurance company, the same company that sells the term insurance, also sells cash value insurance. And they do it because it don't matter which one you buy. Insurance company and the business to make money. They're not a non-profit. They're a business. I call them a manufacturing company. They manufacture product. So my job as a financial fiduciary is this: I need to understand how all product on it works. So once I
Right.
understand it, then I could dissect it and break it down. So there's a lot of things that most people are not familiar with. For example, a lot of folks put money in annuities, right? Because that's what they know. But not realizing annuities are not designed for wealth building. Not the
What are
wealth
they
building,
for?
income distribution.
Okay, so when you leave, like people leave, a teacher might leave, retire, and they have money in a or I guess it's not
401k.
401k, or
Yeah,
403b, or whatever
403b,
that,
yes.
right? So when they have that, and that's what you mean by distribution, or what it,
No, so good question. So income distribution is when I reach that age and I say I don't want to work anymore.
okay,
I want to start receiving income.
okay,
That's what
uh-huh,
an annuity is good for.
okay,
Annuity
okay,
is not designed for people to use to build wealth. It's not a wealth building product. But
okay,
unfortunately, because so many people are not trained to understand the difference, especially the people that sell it, they don't understand the difference between that and that's all they can offer, and they offer just that. You go to it because it's a big moneymaker for the financial advisors that offer it. And again, knowing that, I had to look and say to myself, first off, as a business owner, because I got to talk about things for me. As a
right,
business owner, I want access to my money. I need my money to be liquid. I need to be able to reach it. I don't want anybody holding my money for 9, 15 years. I never get excited. I don't get excited when I'm locking up my money. If I'm
right,
telling
no,
you, why are you locking your money up somewhere where you don't have access to it? That's like putting money in prison.
yeah,
So, but unfortunately, so many people, that's the knowledge they have. So what we do is I look at my clients' situations, and then we recommend things that they can do, especially in today's world. There's so many ways you could invest your money to make more money and
give me
grow it.
2 ways, give me 2 ways,
So one is real estate, right? Real
okay,
estate is great, right? Depending on how you buy it and what you're
okay,
doing. And real estate doesn't mean flipping only. A lot of people think, oh, flipping properties or having
right,
a renter in your property, that's
right,
cool. But there's a lot of other ways you could make money in real estate. For example, I own a bunch of properties. I never seen them with my eyes until I made the deal. What do I mean by what do you mean by that in my eyes? Well, I'll give you an example of one. So a situation where somebody, they already have the property, they have 4 properties
okay,
paid off, but they needed cash to invest in a business or do something with. And because they're not liquid, remember I said credit and cash flow is king. They're not liquid, so they don't have the money, because to get the money out of the house, you got to go to the bank,
gotta
ask
go
for
through all of that,
permission, all that stuff. So they're like, man, we need money to do this. I said, okay, we'll loan you the money, but here's the deal: we have to own the property, and then when you're ready, we'll give it back to you by you buying it back from us. We
okay,
agreed, and now we own 4 property and generating rental income from those properties.
okay, okay,
And
right,
we don't manage the property. The owner of the house manages, the person that came for the loan manages the property. I don't know the tenants or nothing, but now we have property that we own that has a lot of value in it. That if I decide to sell it right now, if they don't pay us, we could sell that stuff quick. It's not even a foreclosure, we could sell it off. But because we have a contract in place, they're making those payments every month. So that's one way, right? And that's a lot of ways that we acquire deals. We wait for the opportunity. Now, if I didn't have the cash, I couldn't take advantage of that opportunity when it presented itself.
if you had paid off like if you weren't on this plan where we take it, we get a lump sum of money and we just want to pay. I don't want any bills coming in my house. I'm gonna pay everything in advance. So like paying your insurance, are you saying all of these things that you could pay for a year, save $20? Is are you saying is better in most cases? I guess everything is
Yeah.
kind of
So
certain.
so the stuff that you pay regular, like your light
Uh-huh.
bill, insurance premiums, those is fine. Those
Okay.
are regular. When we're
Okay.
talking about things that you could actually generate and make decisions, for example, if you're buying a car, for example, there's no reason for you to pay cash for it. If you could finance it. Now, most people always think financing a car means I got to go to the bank. Well, if you don't have good credit, of course, you can't go to the bank. But they miss out on most important thing is setting up a financial foundation, which is why I bring in the insurance part. The insurance, if you set up the financial foundation correctly and have a cash value insurance in place, what happens is when that time comes when you want to make a decision to buy a car, regardless of your credit rating. Because if so here's the choice. You say you go to the bank and they decline you, or they say we will charge you an 18% interest to buy a car, a $20,000 car. But do you know
Right.
that if you had the $20,000 in your insurance policy, you could go to the same insurance company and they'll write you their check for $20,000 without a credit check and give
Uh-huh.
it to you maybe at a 4% interest rate. You go buy the car cash. You walk into the dealership and you say, listen, I want to pay you cash. And you negotiate your deal and you buy the car cash. There's no lien on that car. But the person you owe is the insurance company. And the insurance company will put a lien on your $20,000. But here's the beauty. The 4% or whatever that you're earning on the $20,000 that you're saving with the insurance company, which is earning compounding interest, is more than the 4% simple interest. You actually make more money on the 20 grand that's earning compounding interest than the money that the insurance company will make off of the simple interest that they charge. And insurance company charge interest only. Interest only also meaning when you make your monthly payment, the same money you would have paid to the bank if they had given you the loan and you pay to the insurance company, the insurance company will take your money and apply it to the principal first. And whatever is what after they do that, then they apply the additional money later to the interest, to the balance of the loan, which allows your money to pay off that debt a lot faster. Because most banks, for example, if you owe them $20,000 and they say pay us $500 a month, out of your $500 a month, $200 will go towards the interest, and then the other $300 goes to the principal. With the insurance company, $500 goes to the principal first, and you only pay interest on remaining balance of the loan.
So let me just hear you say, let me say this again. So you're saying with the insurance, when we're borrowing from our policies, the cash value, that if it's $500 for the payment, they're going to keep taking that 500 and pay off the principal, pay it all the way off, and then whatever interest, let's say if it's $1,500 worth of interest that I'm paying, then they'll take my next 500 and pay that interest.
Yes, so interest is annual, right? After they do all your so for example, so just keep it the way. So let's say for example, the 20 grand. So $500 we're paying monthly. So that's $6,000 a year. Right? So $6,000 will go towards the 20 grand. So now you owe $14,000.
14. Okay.
Then they apply interest to the 14,000 because insurance company charge interest on your anniversary.
Okay. Okay.
And your anniversary is the date that you opened up your insurance policy. just like the same date you opened up your bank account at your Bank of America or wherever.
So, as for example, then, with them charging on an annual basis, so my premiums is as I say, is $500 a month, like you're saying. We said the $6,000. So the percentage, whatever that interest rate is, going to be on the 6,000. Like,
No, so the interest. So let's say the interest is 4%.
okay,
All right. But because you're making your monthly payment towards the debt, right? That you owe the 20 grand you owe them. So 12 months period. Because you're let's say you took it out. Let's say for example, I started my life insurance policy January of this year of
okay,
last year or whatever. Just using that
okay,
number. All right.
okay,
So January is my anniversary for every year. So if I take a loan from an insurance company in February, I have to from February to January to pay that loan.
okay,
Now, some companies will charge you interest in advance, and then as you pay, they retroactive and reduce it. But just to keep it very simple, because it all comes out to the same thing. So when I start paying $500 every month towards my debt, 12 months, that's $6,000.
right,
The 6,000 reduces the 20 grand. That means now I only owe $14,000. And then they'll charge me interest on $14,000, not on 20,000. The bank will charge you interest on $20,000.
I
Insurance
got,
company will charge you interest on the remaining balance.
I
That's
got
why
it.
it's so important for people to pay their loan a lot quicker with an insurance company. And if you accelerate the payment and pay even more, you're good. You could pay off that debt a lot faster, and then you have more money to use for other opportunities that are going to present themselves.
Yes. Well, if you have just joined us, we are here on Wealthy Sisters Radio, live with a view with my brother Douglas Aze, the wealth strategist extraordinaire. And we're talking about wealth generating secrets that are right here in plain sight. And speaking of wealth, there's a wealth of knowledge out here, and I just want to let you know that Wealthy Sisters Radio is featured on BlackUSA.news. And that's from my brother, Donnie Glover. You know him out of Baltimore. Check it out. I want to encourage everyone to go to blackusa.news. You can find all types of information on there, wealth of knowledge about our community. Support them. There's all types of shows, all type of rich content. And I'm telling you, you will not be disappointed by checking out blackusa.news. So, Mr. Douglas, you're talking about, we've gone from different shows. We talked about creating your own bank. We talked about the importance of protecting your wealth. And I'd love for you to probably to spend a little bit more time, if you can, elaborating on that as well. But we were just talking about this savings. I'm still stuck on this. Investment is speculation. Savings is compound interest. I know that sounds so simple, right? But for me, it just some things just clicked. So what would you say to a person like who might be feeling like, I hear what he's saying, but I mean, I'm in my 40s, late 40s, I'm in my 50s. I need some money like now. Like I can't, is it how many years do I have to have something like this in place, or what do I have to put in place? You understand my question?
Yeah,
I'm trying
definitely.
to speak to.
So, at the end of the day, is like that saying is so true. It's just that nobody ever explains it. The saying about it's not how much money you make, it's how much you keep the account. Right?
Right.
But nobody really breaks that down correctly for people to understand. Right? And so to help folks is you might think you don't have money, but one thing that we do in our company is this: we help our clients find money in places that they're throwing money away unknowingly because they don't know they're doing it. And unnecessarily, we could help them fix it. So, for example, I met with a young lady, a registered nurse, doing her thing, and but she said, I cannot save any money. I said, okay, let's look at that. So I had her fill out a financial questionnaire so I could see all the debts that she had. See, we actually want to see the debts that you have because we believe we could help you get out of debt. We believe that because we have a system that does it very well. Help people become debt free and build wealth at the same time. I said, let me look at
Now,
all the debts you have. Go ahead.
so coming back to that, thinking of how we've been programmed to why is it important for somebody to be open and honest? Because we're not supposed to tell our business. So you want me to, that's embarrassing. People feel like, oh man, I got all of this, and then they look, so help alleviate that person, because I want people that are watching, I want them to contact you to know that you talk to everyone, right? You deal with everyone, but why help with that while
Well,
you're
when it
explaining what you're
comes to,
explaining.
yes, definitely. When it comes to finance, you got to look at it like the same way you look at your health. When you go to the doctor, you don't lie to your doctor, right?
Some people do.
I mean, some people do, and then they die,
Yeah,
right?
yeah.
They get sick. If you lie to your doctor, then you're gonna get sick, and he's never gonna be able to treat you. So when you come to a financial person, and of course, you don't want to open up to everybody. I mean, I wouldn't go to a doctor if I'm trying to quit smoking. I won't go to a doctor that smokes.
Right.
You know,
Hello. That makes
right?
sense.
I won't go
Yeah.
to a doctor if I'm trying to lose weight. I'm not going to go to a doctor that's huge. Yeah, he
Right.
had experience. He might tell me, yeah, I know how to make. No, I'm not going to
Right.
do that. I'm going to go to somebody that's fit. So if I'm going to talk to a financial person, I need to talk to somebody that do well.
He's
That
documented.
yes, that
Yes,
also
he's
able to
doing well.
show me their
Yes.
situation. If you can't show
Yes.
me your situation, what am I going to do? It's just like somebody saying, I want to help you build your credit. And
Right.
then they have a 500 credit score. Well, build yours first
Did come back.
and then come back and we'll talk about it. Right? So, in the same world, you look at your finance. Don't be scared about it. No, but, everybody's in the same boat. You'll be surprised. So what I did with the young lady was this. I said, let me look at how much you paying for your car note. So we started, I'm going to give you two things that could immediately right now change. The first was her car note. I said, how much you paying every month? She said $700. I said, okay, how long you've had your car? She said, I've had it for 3 years. How many years you financed it for? 5 years. So you've paid in already 2 years. She said, yes. Okay, cool. Let's keep that on the side. I said,
Okay.
what is your car insurance deductible? She said $250. I said,
Wow.
okay. I said, well, let me ask you this. In your years of driving, how long have you been driving? She said, for the last 25 years. I said, cool. When was the last time you were in a car accident that was your fault? She said, never. I said, okay. I said, so let me deal with those two right there. I said, the first thing we're going to do is contact your insurance company. And we're going to raise your deductible to $1,000. She's like, why? I said, because you just told me you've not been in a car accident for 25 years. Why did you get the 250 deductible? She said, if I get into an accident, I could pay 250. I said, yes, you can. I say, but what you're doing, your premium, let's just use an example. Let's say our premium was $2,000 a year
Right. A
for
year.
that 250. I said, but if we raise your deductible to $1,000, drops your premium, again, using an example for this particular situation. Let's say it drops your premium to $1,000 a year. That's $1,000 difference that you could put away in a compounding interest account that's going to grow every year. And if you get into an accident that is your fault, You could take your $1,000, pay the deductible.
Right.
But if you
Right.
don't get into another accident for another 25 years, that $1,000 that you put every year is gonna compound and grow. So we just found money there. Then the second thing, I said, let's refinance your car. She's like, well, I only
Okay.
got 3 more years to pay it off. I said, but it's not making you any money. You're giving the car the car company $700 a month. I said, let's call another bank, because banks are in business to do what? Loan
Loan.
money.
Right.
Other people's money. Let's call another bank, because the same bank will refinance you. Isn't that funny? They don't, but you have to go to a different bank. So we went to another bank and we got a loan, and we did it for another 72 months. She's like, why 72 months? I said, I'll show you why. Your payment is going to be lower. So we took the $700 to $200 a month.
Oh
That's
my goodness.
$500 a month we saved. That's $6,000 a year plus $1,000. That's $7,000 she was able to now put in a compound and interest account that's earning her guaranteed 4% interest and protection on her life in case death happens. So we could find money.
Man, you just wiped out the whole thing of you shouldn't have a car note, because 72 months, is that 6 years? How many years is that?
Yeah, that's 6 years. Yeah,
Yeah.
mine. I do 90 months for me.
Wow. Because you're gonna have one anyway. That's what you're saying.
Listen,
And
you
you
know, so I'll give you. You know, when your price paid
so
off,
you get your Tesla for 150 a month.
right? And, well, but here's the deal. I mean, understand this, right? I do it maybe for 2, 3 years, and I refinance it again,
Okay.
stretch it out again. I'm not in a hurry to pay off a car. Now, what I sometimes do, if I get tired and I'm like, okay, I could take a loan from the insurance and do a refi, but this is a refinance with an insurance company,
Okay.
and they give me their money. They do, and it's called, I refi. They give me their money. I pay off the car, and I start paying the insurance company. So that's why I have like 15 policies that I
You
use.
just you just say that lady. I mean, she went from $700 to $200 a month, just like that.
Yes, and now
Just
she's
like
able
that.
to use the same money should have been given to the bank and to the insurance company to not only protect her family in case she dies. She's a single mom with 2 children, no life insurance. If she drop dead that moment or get sick, the children will be out on the street. So
They'll
I
be out on the
use the
street.
money,
Yeah.
not only give her insurance for her life to protect her life, but at the same time save for her future.
And save for her future. And then the other step that we talk about, I mean, the time is going by so fast. Douglas, will you come back again?
Sure, invite me, yeah.
But the next step we talked about, from the knowing that, finding the money in places, because we're talking about creating wealth, generating wealth. You talk about protection. So in that same space, for someone to be able to get the insurance policies that we're talking about, to use, to borrow, to have the loans, to build wealth in that way. How is someone going to be able to protect, like that mother? She's going to leave money for her children. But what would need to be in place a step beyond that? Because I went through that with personal story with my baby
Yeah,
sister that passed with a
definitely.
child.
So
Yeah.
at her level, we also, introduced her to a living trust for her situation. There's over 80 types of trust.
Wow.
So based on her situation, based on the situation that she has going on, we did a living trust for her. A living trust protects have children from going to probate court. So they don't have to go to probate. They don't have to deal with the court system and deal with, people coming after the money and the debt, that she has. So it protects that for her to make sure everything is done. Now, as she continues to grow in wealth, as we work with her, she started as a RN. Now she's grown bigger. She's now a nurse practitioner, have her own business, doing stuff herself. Now we introduce other types of trust to also not only protect her assets, but also avoid probate. Because there's different types of trust. Some trusts only protect, avoid probate, while other trusts protect asset and avoid probate at the same time. So we introduce those kind of conversations we have. So, just like I always say, I wouldn't know a whole lot from you unless you give me information. The
Right.
more I know, the more I can help.
Right.
So that's why it's
Right.
important when you come into the house and you're sitting down, make sure you let me know. Because that's why we ask a lot of questions. I want to know what the debts that you have. What are your goals? How does your family tree look like? Because I need to know all the people that you take care of. Because so many people take care of a lot of people and not realizing that if something happens, all those things stops. So we need
Right.
to do all that.
Right, right. That's powerful. That's powerful. Well, again, you have just tuned in. If you're here and you're listening, you just kind of got in between. This is Wealthy Sisters Radio with the View. Here with Mr. Douglas Aze, the wealth strategist extraordinaire, and I'm saying this really sincerely from my heart. I cannot think of a person who is more passionate about educating, especially our community, on the creation of wealth and how to protect your wealth. So, Douglas, I'm going to put up your website. I know you have the douglasaze.com that's going to also show your book. Is there anything else that I need to share with people that they can reach you to be able to contact you? I know on your website there's your calendar and all of that as well. But is there any other thing or any other connection that you want them to be able to have access to?
Yeah, definitely. They could follow me on Instagram. I am Douglas Aze. That's my
Okay.
handle on there. Or
Okay.
Lago Financial One on Instagram. We're there. And on YouTube, we share a lot of great information. So if you go on YouTube, just put in the name Douglas Aze, and you can subscribe to my YouTube channel. I'm constantly putting videos so you could continue learning these strategies to continue to help you win. And if you're interested in, of course, in a mentorship, then you could also go to um, havemoneyforever.com. Have,
Have money
have
forever.
moneyforever.com.
I love that. Have money forever. And I'm going to share my screen here. I want to make sure you can see it so
All
that they
right.
can see your book here as well.
Yes. Yes.
That's it. That's it. And have money forever. That
.com.
is a great domain.
Check it out. Check it out. See if you can pull it up.
Yeah, but let me pull it up right now while we're doing this. Have money. Let me move my mic out the way here. Have money
Forever.
forever dot
.com.
com.
Let me see.
Come on up here. Oh, wow. There it is. Have money forever with Douglas Aze. All right. This
Yep.
is a great site. A lot of information on here. I
Yeah.
can see
So,
it. I can
so
see it.
basically, it's my mentorship class for folks that want to jump into a mentorship with me, and I get to teach a lot, and I'm actually putting some other tips in there for them as well that we're gonna be bonus for a lot of folks. So it's great because I'm gonna
Okay.
this when we get into a one-on-one mentorship, I show them where to actually invest money, where they could
Okay.
make you know anywhere from a 46% return a year.
Okay. So should I click on this add to the cart here? Because we need to make
Can
sure.
yeah,
Okay.
yep,
Okay. So only $4.99. Is that a
that's
that's
it.
a is that
That's
a
for the whole
once?
course.
Is that
One
a
time.
one? That's One time.
Yep.
And how long is the course for?
So that one right there is just they go through the model. There's about 6 models on there of me
Okay.
training, talking and teaching. And then they
Okay.
have an opportunity to also meet with me live after that. Because I wanted to go
Okay.
and then learn a lot, and then we can meet on a one-on-one as well after that.
Oh, that's awesome. So only $4.99 to
Yeah.
meet with someone at the status that you are at. And I'm not saying that, in any way because we're humble about it. We know only God deserves praise. We know that. But we're talking about the accomplishments that you have in your field. And you are accomplished, you're documented, you have businesses, you've created wealth. And so who better to share with someone, how to be able to do this? Because I've seen packages that people are going to teach you. And I mean, come on, $500?
And it took me a long
No.
time to actually put something like this out because,
Yeah.
I mean, when you check out, it's all about giving and helping folks just scale themselves. But I realized, you know what? A lot of times, when you give out free information is great. And I have tons of free information on social media that you go tap in, you know. And for me, it's all about making sure that a person will go through the course and learn, get some ideas from there, and then let's meet up and talk about it. But most important, I mean, like you said, I mean, I have a technology company as well. There's a global technology company that we track vehicles, cars, and stuff like it's called Camway.tech. And then we also just produce an app called Sibenza, which we use to provide jobs for people in countries where nobody knows who they are. So just doing stuff and giving back in a bigger way, so all the money we produce just goes back to just helping and making sure folks continue to scale and grow. Because I believe this: when you have money, you have a voice. If you don't have money, then the government will continue to use you and take advantage of you. So my whole goal and build in life is, as long as I'm alive and God continue to bless me, man, we're gonna give back all day, every day.
My sister here, Allison Lacey, thank you so much for tuning in. She said this was absolutely phenomenal. I stumbled on this by accident. There is no accident, sister. Everything is in divine order.
Right.
But I'm so grateful to have found this. I will reach out to Mr. Aze for some real guidance and assistance. That's great. That's great. Awesome. Well, thank you so much, Douglas. I appreciate you. And definitely, I'm going to be signing up because I was just saying, this doesn't make sense. I know you do trainings on Wednesday with the agents. I was just sitting here, it's like, this is just don't make any sense. I mean, I need to get some more info from him. I got a friend like this, and I got questions about stuff. This don't make sense, Deborah. What are you doing?
It's all good.
And then you said you got this right here. This have money forever. I was like, I need to be, because I need to be linked up to him. I mean, I'm linked up to you, but I need to be linked up.
Right, right. No, I agree. I mean, at the end of the day, the, there's there's so much knowledge, right? And I'm
Yes.
constantly adding more knowledge. I'm constantly learning, from my mentors and stuff like that. Just learning from them, people that are more successful. And I just opened up another business in Africa. I'm going to be flying out there, in the end of the month to go tackle that business. Because again, it's all about finding a solution to problems. And we just opened up a business that we're able to do water meter for a
Oh,
country. I can't
wow.
say the country's name yet, but water
Wow.
meter, we'll be able to do electric meter. And also, because of that same opportunity, I opened up an oil and gas company. So we're gonna be opening
Wow.
a gas station and stuff like that. So just doing global business, just because there's a lot of opportunity outside of America, but you have to connect with the right people,
The
and,
right people.
and
Right.
especially if you yourself are a right person. and then God will align the right people for you.
That's
So
right.
all this is done by me using cash value insurance to scale.
You said what he's saying, y'all. He said all that to say
That's it.
you want to contact him to learn about how to properly use cash value insurance.
That's
It's
right.
not a bad word, you know. I remember growing up, my oldest sister, God rest her soul, may she rest in peace, and may he make her grave spacious.
Amen.
She used to say all the time, insurance companies, it's a special place in hell for them, right? But when I got my license, you know, I learned and became an entrepreneur. You know, I understand business and how it works. And there are companies, period, not just insurance companies, but there are ways that people take advantage of people.
Yeah,
Right?
and it's
We
not the
understand
insurance
that.
company, it's
Right.
the agent.
It's the agent.
It's just like when you go to a car dealership, it's not the car dealership, it's the salespeople, or well,
Right.
not even the dealership, it's the manufacturer. It's not the manufacturer of the car, it's the
Right.
salespeople that sell the car.
Right. 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 Right.
So
Right.
sometimes you meet good people, sometimes you meet bad people. You
Mm-hmm.
can't just put a big blanket on everybody. You
Oh,
know,
everyone. Right. Right.
right? So it's all it is. And one thing I say is this, and this is why we're so passionate about what we're doing. Our goal this year is to do about $1 billion in debt benefit in the community. Why is that? Well, because we found out that one company, and we're not going to mention the name, but what they did, we asked the question, because when we want to bring in a company to work with us, we ask questions, and we asked them,
Right.
how much debt claim did you pay out? Like, and they said 5 billion. That's a lot of money,
That
$5 billion.
is.
And then I
Right.
said, how much, which is one of my good friend was telling me that he's part of that company, but he's with us now, and he was sharing, and he asked them, he said, you know, how much of that went to black people?
Right.
And they said about 100 million. He's like, wait a minute, $5 billion was paid out, and only 100 million was paid to the black community. See that generational wealth gap that we talk about? He actually wrote a
Huge
book,
gap.
Wealth Gap. You all should check it out. It's called. His name is Eugene Mitchell.
Yeah,
You
I
know.
have his book, and I
Yes.
can't get to pull it out
So
off my shelf right now.
So because of that, we created a movement where we want to put $1 billion of life insurance in the African American community that are underserved when it comes to that. And we're educating insurance agents on the importance of making sure that when they sit down with a family, they really value and show the family how much you're really worth financially.
I just found this book right here. I'll pull it up, and then we will
Yes.
sign here. Let's see. The screen is already being shared, so let me do it right here, and you should be able to see it when I go to it. You see it there.
Yes.
Yes, closing the wealth gap, the racial
Racial
wealth
wealth
gap.
gap.
That's right. That's right. That's an awesome book. Awesome
Awesome.
book. Not surprised, like I said, when people are connected, when you're connected with good people, you're giving out the greatness that you're giving out. You definitely, God has it where it's going to be returned to you in manifold. So, again, Douglas, we cannot say thank you enough for coming on the show today, blessing us with everything that you have. We're looking forward to having you back. I'm looking forward to hearing, the feedback from people who've been able to connect with you. I'm excited already into the lives that you're going to continue to impact. And again, I say thank you to everyone for tuning in, for taking time to listen to us today. I am truly grateful. And next week, we are super excited for next week. Oh my goodness. We have none other. Well, let me let you see who we're having on next week. My superstar friend. That's Miss Twyla Garrett, multimillionaire. She's built millions through federal government contracting. She's the type of woman that she'll look on and see what the RFP is and not have been in that industry, will go and study it and do what she needs to do, create it, the construction company, and did $1 million
Mad.
something her first year. I mean,
Love it.
she's incredible, and she's also on the insurance side. She also has an agency piece there for disaster on the what's the term I'm looking for? The adjusting side.
Wow, yeah.
Yeah,
That's a
yeah,
good
yeah, yeah, yeah. So she's brilliant, full of passion. Don't miss next week, guys. I'm telling you. And please, please go ahead and subscribe to the channel right now. You're watching us on YouTube. If you're on Facebook, subscribe there and go over to YouTube. We want to be able to make sure that we're sharing this information with others. And in order for us to do that, we need you to like and subscribe and share. Douglas, I value your time. I won't hold you any longer. Again, thank you so much. We love you, love you, love you. And as always, we'll be in touch. Safe travels, and may you continue to be blessed in everything that you're doing.
Appreciate it. Thank you so much. Great seeing you.
Oh, likewise. With all that said, we'll see you all, God willing, next week. Bye now.
This has been another episode of Wealthy Sistas Radio. Thank you for joining us. Catch the full hour encore Thursdays 2 p.m. to 3 p.m. Eastern and 20. This has been another episode of Wealthy Sistas Radio. Thank you for joining us. Catch the full hour encore Thursdays 2 p.m. to 3 p.m. Eastern and 24/7 at wealthysistasradio.com. The opinions of our guests do not necessarily reflect the opinions of our hosts, staff, or partners of Wealthy Sistas Radio.